So like I said, I want to go over a few markups with you guys. If you don't know what markups are, basically what we do is we will take the three systems that we trade here at ASFX, the A1, the D1, and the D2, and we will mark them up as they present live in the market, of course, when I'm at the desk, but I'll also go back using TradingView, using the replay tool, and I'll mark up entries that I wasn't at the desk for, or entries that I maybe didn't like and I didn't trade, or entries that presented and I just wasn't paying attention. Either way, I want to make sure I'm documenting as many of these A1, D1, and D2 signals, the signals that I trade. I want as many of them as I can, as many markups of those trades as I can. Win, loss, break even, doesn't matter. All of these markups will go into my back testing, and that back testing will give us the confidence to continue to trade the system, or if we need to alter the system. So you can take a look here. I have a couple of markups as examples, always saved in my folders. I want to show you first. These are from the previous week. This is, let me show you here. This is CHFJPY from the Thursday of last week into the Friday of last week, and then it actually carries into today. So this is a D2 entry idea. I'm going to move my head a little bit bigger up here so you guys can see the trade. That doesn't help. Let's go back down here. So this is a D2 idea, one of the three signals that we trade. I loved this trade specifically because there was a few JPY quote pairs last week that looked like they could pull back on this Thursday. This was the best one in my opinion because you had the best risk reward to each EMA. If you read my notes, you'll see we were trading this as a second or third break of the 50 EMA, using the divergence to signal the top, and then seeing here a lower high set in, and then again here another lower high set in off that divergence top, which was right here. So as these lower highs are set in, that can give us the potential for a D2 entry. Then here, as we break the 50, we're in a downshift with the 8 under the 21 EMA. That's where we get to see this thing really spill over. The risk reward to the 200 EMA right here was about 1R. So that was a great little pop. It ends up pushing through there, coming back to retest that same level of that 200 EMA. And then as you can see, it falls all day, 71 pips through the 800 EMA, which is down here on the bottom. Let me move this so you can see. Through the 800 right here, down 71 pips, a little bit more than that actually by the end of the day, Thursday. What was interesting here, this is where it finished on Thursday. It pulls back, makes another lower high here overnight into Friday, and it actually falls about 107 pips into Friday. So if you just notice the divergence on top with that falling RSI, that rising price action, that sets in the top with a little doji up there. Then it makes a lower high, another lower high, lower lows, lower highs, lower lows, lower highs, lower lows, lower high, lower lows, lower high, lower lows. It's basic price structure, but it's using that divergence on top and the 50 EMA specifically to identify where that D2 entry signal is, where to pick your spot. So that was one of the ones I wanted to show you from last week. Now we'll turn to Euro CAD here. It's very similar. Another D2 idea. Let's minimize that so you can see more. Let's blow this up. So you'll see RSI is falling from here to here. If I blow up the RSI, you'll see RSI is definitely falling, right? Price action is rising. So that signals that we might get a D2. Doesn't mean we're going to get the reversal, but once we break the 50 EMA and we have that divergence on top, it definitely means that the uptrend is not in control anymore. That's for sure. Divergence doesn't mean reversal. Remember this, divergence means change. So here it shifts down, 8 and 21 EMAs cross down, breaks the 50 EMA once, retests it. See, it breaks, retests it, and then as it falls off of it that second time, with it being in the downshift, that's where we would look to take the D2 entry. Stop loss would go at the most recent lower high, which would be right here, right? Here's the top, here's the lower high, and as you can see, you're just looking for that 8 to stay under the 21 and for this to hold the 8 EMA. Now this accelerates. This picks up quickly once it breaks the 800. There might have been some news here. This is about 8:30. I think there probably was some news that ends up really shoving it down, and then after, you can see, it just retraces that news push. But here, it falls 4.6 R. It's 57 pips. If you're moving your stop loss at each R multiple, you're closing profits, you're moving your stop, you're going to get tagged out in profit, but you're going to be able to get 4, almost 5 R out of this trade. So it ends up being a really nice setup. Okay? Josh, what's up, bro? Good morning. Thanks for being here, bro. Ivan said, do you recommend learning the A1 and D1 and D2 before jumping into the Black Shirt Club? Definitely. You don't have to. We have a couple of people who don't have the ASFX courses and they are in the Black Shirt Club, but that's because their trading results were verifiable. Like they are trading successfully on their own and they're looking for more of the psychological coaching on how to get better at their own system. But I think it always will be a more impactful coaching experience if you already trade the same way that I trade. You know what I'm saying? Good. If GN presents a signal, would you stay out because of the news that's coming? Yes. We'll talk about that in a second, Aiden. Is there any things that can make emotion in control except to follow plan means other things? I think if you have a detailed plan, it's easier to not be emotional in your trading. If you backtest and do chart markups like this, it makes you more confident in the plan, in the system that you're trading, and then you are less emotional in the moment because you're waiting to pick your spots in alignment with the system. That's why I'm such a big believer in the systems. Bougie said, is it a knock if the D2 only has 2 jabs of divergence? No, it is not a knock. We're just looking for the divergence, and I'm looking for the price structure. The amount of jabs is something that I'm really not paying attention for at all anymore. Good questions, guys. Good questions. So that's EuroCAD from last week. Let's go into Euro NZD. Very similar, not 100% similar. Okay, so this is interesting. RSI is rising. I have this white trend line drawn from the previous day. You would be short biased initially here on Euro NZD. This is on Thursday of last week. You would be short biased. EMAs are short biased. It is stuck in the Asian range. As you can see, here's the Asia low and Asia high. It's stuck in that Asian range. But because of the market sentiment being in the sell zone and the EMAs being in a downtrend, you'd be looking for shorts right at about here off the 50 EMA to see this come lower. It never breaks out of the Asian range. Instead, it breaks out to the upside. Now, why I have this marked up? The bullish divergence is not that strong. The RSI is rising very clearly, but price action is not falling. You would need price to be falling to really make this look like it's bullish divergent like that. You'd want price to be touching this white line where it's not. So really, I was just looking at this as like a wedge where we have a bottom tested 1, 2, 3, 4, 5 times. It breaks the wedge to the upside, and then it ends up carrying for 2 days. The rest of that day into Friday. Thursday into Friday. 115 pips, risking 23. Not an A1, not a D1, closer to a D2. Just a D2, I'd say, with like a technical wedge breakout, if you would. But just something I wanted to put notice of, because I think here, if you're understanding what the Asian range is, and you know not to go short when you're still in the Asian range, even if market sentiment says to go short, even if the EMAs say to go short, you wait for that break or you don't go. Waiting for the break would have saved your money today. You might not have caught the long move, but at least you didn't get stopped out going short. Okay? So that was another one there on Euro NZD. Now let me take you to GU. So here, GU had big news on Thursday last week. You can see this huge news bar. It ends up continuing lower the rest of the day Thursday. And then here on Friday even, you get a big A1 shift candle. 8 and 21 EMAs cross. There's a little bit of 1 minute bearish divergence in here. I have 2 knocks on it. It is the biggest body of the day, so it's overextended. It's 30 pips. It's pretty big. Stop loss would have to be 30 pips. And it's the first break out of the Asian range. You can see how quiet it was in the Asian range, and then it just tanked once the London market opened. And here, you catch 1.6R. It does fall for about 2 hours for you. But I think it's probably one that if I was awake, I would have avoided. Just because it's a big bar, just because I know it's the first break of the Asian range. You have a little bit of divergence then building on the bottom as well. After the news, I would have just found something else. That's what I would have been doing. So that's what we were looking at here on GU on Friday as well. And I think that'll cover it for now. Those are 4 pairs. I showed you CHF JPY. I showed you Euro NZD, EuroCAD. And GU. Those were some of the entries that we were looking at Thursday into Friday that fit the ASFX systems. I don't know if you traded them. Maybe you did, maybe you didn't. But now hopefully you have some clarity as to where the entries presented, where the spots are, and how the ASFX signals can present going both ways. Long, short, doesn't really matter. We're just looking to ride that trend for the most part, unless we're taking a D2 trade and we're calling the reversal. Make sense?